Good evening and welcome to another episode of Night Markets. Financial markets close at 5 p.m. Night Markets opens at 6 to widen the conversation. Each week I'll be giving you my perspective on what's driving markets as well as my point of view as a family office professional. My name is Jacobus Brink, the Chief Investment Officer and Head of Investment Research at SFO. So during the course of the week, global markets ended on a mixed but fairly positive note, driven mostly by central bank actions, geopolitical events and key economic data. Optimism rose due to China's stimulus efforts and a continued rally in US tech stocks. We also saw signs of slowing inflation in several regions that fueled hopes for rate cuts. Commodities experienced some volatility while bond yields stayed steady for the week. Before we get into markets and macro, let's just have a look at the current situation in the Middle East. Tensions between Israel and Hezbollah escalated quite substantially along the Israel-Lebanon border during the week. Israel conducted airstrikes on Hezbollah targets, aiming to weaken its missile capabilities, which posed threats to Israeli infrastructure. Hezbollah also responded by firing rockets into northern Israel, raising fears of a larger conflict. Over 100,000 Lebanese civilians and thousands of Israelis have evacuated the border areas. Despite international calls for ceasefire, both sides seem unwilling to de-escalate, making a prolonged conflict more likely. And then moving across to markets, US markets were lifted by strong gains in tech stocks, with the S&P 500 hitting an all-time high once again. Companies including Micron and Accenture also led the rally. However, consumer confidence fell to its lowest level since 2021, tempering sentiment slightly. On the inflation side, the Fed's preferred inflation measure, the core PCE, rose by 2.2% year over year, also bringing additional possibilities of further rate cuts going into the end of the year. And looking at the market performances, the Nasdaq outperformed, rising nearly 1%, while the Dow gained 0.57% and the S&P was also up just over 0.5%. Then moving across the Atlantic to the UK and the Eurozone, European markets rallied on hopes of future rate cuts. Slowing business activity, particularly in manufacturing, raised the expectation that the ECB might adopt a more dovish stance into the end of the year. Similarly, in the UK, inflation also hit a 42-month low, increasing the likelihood of easier monetary policy by the Bank of England. And looking at market performances, the Stoxx Europe 600 index rose by almost 3%, with Germany's DAX up by more than 4%. And then moving further east, Japan's Nikkei 225 rose by almost 6%, boosted by China's stimulus measures, as well as dovish signals from the Bank of Japan. Japanese exporters, particularly those with exposure to China, saw some strong gains during the week. The big news of the week was the announcement of the China stimulus package. This is the largest package we've seen since 2008, leading to a 15% surge in the CSI 300, as well as the Shanghai Composite Index. However, certain market participants still remain concerned about the sustainability of China's recovery. Then moving back home, what was a fairly quiet weekend with the public holiday on Tuesday, South Africa's markets pretty much followed the global trends, with rising gold and platinum prices supporting local equities. We did see the release of producer price inflation, which fell to 2.8% year over year in August, driven lower mostly by fuel prices. And looking at the markets, the all-share index ended the week higher by 4.47%, with the resources sector up nearly 6%. The Rand also continued its strengthening trend of the last few weeks, up another 2% versus the US dollar to close at 17 Rand 11. And then just looking at the week ahead, markets will focus on US jobs data as well as Eurozone inflation and a speech by Federal Reserve Chairman Jerome Powell. The US non-farm payrolls and Eurozone inflation data will be key in shaping central bank policy going forward. Locally, we'll see the release of the private sector credit data as well as manufacturing data. And then, as always, we'd like to end off the show with an interesting investment idea we discussed during the week. The highlight of the week in markets were definitely the monetary and fiscal stimulus we saw out of China. The Chinese market obviously had a massive rally during the week, ending higher by 15 odd percent. And the markets are actually now trading around 40% higher than they were a few weeks ago. If you view the stimulus program in isolation, the measures announced are not necessarily enough to turn around the economy as such. The interest rate reductions we saw are still fairly small, and the reserve ratio requirement cut is also within its historical range. Nevertheless, what we did find encouraging is that authorities have indicated that last week's actions are the first installment of further policy stimulus. So this could mean that the bottom in the Chinese market might be in, but if the last week is anything to go by, we could still see a lot of volatility going forward. So on a relative valuation basis, it's definitely something to consider, but the ride will definitely be a volatile one. Thank you for joining me for another episode of Night Markets. Financial markets close at 5 p.m. Night Markets opens at 6 to widen the conversation.